Did you know index funds beat active stock pickers 92% of the time, according to the Wall Street Journal? So, I'm going to reveal the best 4 index funds that could be your ticket to financial success. So, what exactly is an index fund? If you're already familiar with the concept, feel free to skip ahead to the next chapter. Think of an index fund as a giant basket of stocks. It's like getting a piece of the action in a whole group of companies, which is a clever way to reduce risk. Here's the beauty of it. Imagine you want to invest in the S&P 500, but you're baffled by the choice of 500 different stocks. That's where an S&P 500 index fund comes to the rescue. It grants you a tiny slice of all 500 stocks, sparing you the headache of buying each one individually and figuring out the right amounts. The main advantage of an index fund is you're not at the mercy of a single stock's fate. If one stock crashes and burns, the others in the fund can pick up the slack and you won't lose all your money. Now let's dive into our top index fund picks. Up first, we have Vanguard's VFIAX Index Fund. This tracks the S&P 500, which in simple terms means it follows the top 500 publicly traded companies in the US. Here's why it's a fantastic pick. You gain exposure to the US stock market across 11 sectors, with no sector getting more than 30% of the action. VFIAX has returned an average 7.45% since its inception in the year 2000, which is almost identical to the return of the S&P 500 in the same period, 7.47%. The top holdings include the largest US companies you can think of, including Apple, Microsoft, Amazon, and Nvidia. Choosing an index fund, especially for new investors, can be daunting with all the options available. But don't worry, there are 2 vital things to consider when comparing it to similar funds offered by other companies. First is the expense ratio, which is a measure of how much of your investment is used for administrative and operating expenses. In the case of VFIAX, that ratio is 0.04%. To put it in perspective, for every $10,000 you invest, $4 is taken as fees. This is extremely low relative to the average index fund expense ratio of between 0.2% and 0.75%. The second thing to consider is the minimum investment. As the name suggests, this is the minimum amount you can invest. For VFIX, it's set at $3,000. If you're worried that $3,000 is a lot for one investment, don't worry, I've got your back. There's a VOO ETF by Vanguard, a close cousin to VFIX, which is almost the same thing, but it has no minimum investment. But that's a topic for another video. If you're enjoying the video so far, please subscribe for more career and investing insights. Next up, we have Vanguard's VVIAX Index Fund. This fund tracks large US companies in market sectors that tend to grow slower than the broad market. The idea of this fund is slow, steady returns with lower risk. This is a great option if you struggle to handle large swings in your portfolio and you prefer putting your money into something a little safer with the compromise of making slightly less returns than the overall market. VVIAX has returned an average 7.03% since its inception in the year 2000, which is slightly less than the return of the S&P 500 in the same period, 7.47%, but had much less volatility or value fluctuations. The top holdings include large, steady-growing U.S. companies like Berkshire Hathaway, ExxonMobil, United Health Group, and J.P. Morgan. The expense ratio of VVIAX is 0.05%, so just slightly higher than VFIAX mentioned previously, but still very low. The minimum investment of VVIAX is also $3,000, but this also has an ETF by the ticker VTV available with no minimum investment. Number 2 on our list is Vanguard's VTSAX Index Fund, or Vanguard's Total Stock Market Index Fund. This fund provides exposure to the entire U.S. stock market, including small, mid, and large cap stocks, as well as growth and value stocks. This is a great option as a low-risk tracking of the entire U.S. economy. VTSAX has returned an average 7.71% since its inception in the year 2000, which is slightly greater than return of the S&P 500 in the same period, 7.47%. This index fund includes all companies in the U.S. stock market. The top holdings include Apple, Microsoft, Amazon, and Nvidia. The expense ratio of VTSX is again 0.04%. The minimum investment of VTSX is also $3,000 as standard with the other Vanguard funds mentioned. Moving away from Vanguard funds and onto our number 1 on our list, which is Fidelity's FZROX Index Fund, also known as Fidelity Zero Total Market Index Fund. FZROX provides exposure to the entire U.S. stock market, but with a few key advantages. Firstly, the expense ratio is much less than VTSAX. In fact, it drops all the way down to 0%, which means it's a totally free index fund. So 100% of the money you invest goes towards the investment itself. Make sure to hit the like button for 0% fees. FZROX has no minimum investment, so you can invest as little as you like. This makes it an excellent option for new investors who are looking to try out index fund investing, as you can invest a small amount of money and not have any of it taken by fees. Fidelity was the first company to come out with a totally free index fund, which is paving the way for the future. I hope this video was informative and you learned something new about index funds and the different options. Maybe you'd like to check out this video on the #1 wealth killers.